Everybody keeps asking me the same question right now. What's the best city to invest in real estate in 2026? And let me just save you 6 months of scrolling at midnight, talking yourselves in and out the cities because you don't know nothing about them. Let me just save you that time and give you my top recommendations for the best cities to invest in 2026. Now let's get into it. Welcome back to another episode of Wealth Within Reach. Just in case you're new here, I'm Erica Brown and I teach landlords how to buy and scale in real estate without burning out, without draining all of your savings and doing all the things. Okay. So let's jump into it. So first of all, when it comes down to choosing a real estate market, I have some very important metrics. It's important to break down before I just give you the list. Okay. So here are the things I'm looking for that I think make up a really good market to invest in. Here's the context. I've been investing for 10 years. Okay. I've seen multiple cycles at this point. I've been able to truly see the rewards and impact of real estate. And that takes time. If you're thinking about getting into real estate because you think it's like a get rich scheme type of situation, it is not. Okay. You really make money in real estate over time. So if you buy a property 1 year, you really can't expect to see the benefits from the investment, maybe 3-5 years. Okay. So I've been in it for 10 years. So this is me giving you my 10 years plus worth of experience, plus the people I've learned from that I get my knowledge from have been in real estate for decades. Okay. So because you work with me, you also get that purview as well. So here are what I'm looking for when I say the top cities to invest in. Number one, I'm looking for cities that have population growth. You want to buy in a city where people are moving to, okay? One indication that there may be a city that I definitely do not want to buy in is if the population is declining. People are leaving. There is a reason why people are leaving, okay? And you don't want to buy in a place where people are leaving. You want to buy in a place where people are coming more and more year over year. Why? Especially if you're looking to, even if you're looking to flip or you're looking to buy and hold real estate, that's important. You want to be able to sell your house and have multiple buyers, or you want to be able to rent out your house and have multiple options to rent out your house. You don't want to have vacancy for a long time. Buying in a city where the population is increasing is one metric that is really important to factor when you're researching what markets to invest in real estate. Okay, here's the second thing I looked at. I looked at job growth. Okay. People are moving to places where the jobs are. Okay. Everybody's not an entrepreneur. Even though I go to the store or I go get my nails done on a Tuesday at 10 o'clock and it's full and I'm like, why y'all here? Okay. Like, why y'all here? I'm here because I think that y'all are not here as a business owner and y'all are here. Even though it seems like everybody owns a business, at the end of the day, most people work jobs. And so people move to the cities where the job opportunities are. So when thinking about investing in real estate, I like to look at markets where job growth is expanding, where very profitable, safe companies are moving to, building factories, building headquarters, buying land, expanding. What happens is that corporation creates a ton of jobs when they do that. That's a good thing, especially if they are good paying jobs. Okay. So like we said, number one is population growth. Number two is job growth. That's important. And number three, here's a third thing I look at when I'm thinking about choosing a market that is good to invest in. I'm looking at appreciation over time. I'm going to do another episode later. It's about whether you should buy cheap houses in high rental markets or invest in appreciation. Everybody wants appreciation and cash flow, but in 2026, that's really hard to find. A lot of times you get either appreciation or you get cash flow. Okay. And what I mean by that, I never want you to buy a property that does not pay for itself. I never want you to buy a property necessarily be in the negative every month. But right now, because costs are higher to invest in real estate, you're buying a real estate asset for maybe other reasons than trying to just get additional cash flow. Okay. You may be buying because you want to buy in an area where the house is worth $200,000 today, but the house may be worth $400,000 in the next 5 years. That is a really smart reason to invest in real estate. Maybe you also want to invest in real estate because you need to get some tax incentives because you're paying a lot in personal taxes. So then that's also a really good reason to invest in real estate, plus investing in a market that's appreciating. Okay. You have cities like a lot of the Midwest cities like St. Louis, like Cleveland, like Detroit. They stay on the top 10 list of markets to invest in real estate. But with those markets, a lot of times, not all times, but most times, you can find very cheap houses and you can get decent rents, but the market does not necessarily appreciate over time. So this list that I'm telling you today are in markets where you could actually buy a property and the appreciation is growing more than other places over time. Okay. That's what I'm looking at. Our first investment, we bought it in Atlanta because timing is everything too, y'all. Timing is everything. You know, being able to invest in the right time, being able to invest in the right market where it's aligned. It's also you have enough money and down payment and resources. All of that can factor into your success. So for me, in Atlanta, we have something called the Atlanta Beltline. It's similar to the High Line in New York. Okay. And so I knew because I go to the neighborhood association meetings and the planning meetings and things like that, which I recommend, which I'll break that down a whole nother episode later. It's always important to know what's happening in your area that you're looking to invest in. So here nor there. I was going to these meetings and I was learning about this thing called the Atlanta Beltline that the city was pouring so much money and infrastructure into building. And I knew the route where the Beltline was going to be. And I understood this concept of live, work, play, building housing, restaurants, all these types of things along this trail. And so I had that image in my head. I was attending the meetings. I knew the routes where they were going to be building the new trail. So as I was getting into real estate, it was so funny. This is my first year. I had just left my corporate job. I was a full-time real estate agent and I was working for an investor and I was looking for houses for this investor. But I was like, okay, if I stumbled across this portfolio. And the portfolio, it was a person or a company, they owned a bunch of properties in Atlanta from Florida, and they were looking to sell all their properties. And I was like, okay, I'm looking for my client, but if I find one or two properties that I like, can I buy it? Which is crazy, me asking, can I? That just shows you the evolution of growth over time, because I would never say, can I? But I asked, can I buy it? They were like, yes. I found one property that I knew according to the Beltline. See, they didn't know about the Beltline, because if they knew about the Beltline, they wouldn't have sold me that property for that cheap. But I knew about the Beltline. And so I figured out that this one property was very, very, steps from the Beltline, y'all. Steps from the Beltline. It was so close. And I seen it and I was like, oh my gosh, we can buy that property. So we bought this property in 2016, right near the Atlanta Beltline before they broke ground, for $60,000, which is crazy to, like, in Atlanta now, you can barely find a lot for $60,000. So we bought a whole house for $60,000. The house had previously been a Section 8 rental. I liked that because I knew that it could be occupied. The tenant had already moved out. I was big on not wanting to displace anybody. They had already moved out and moved elsewhere. But I knew that I was like, okay, if someone lived in the property, especially being Section 8, they have to do inspections and things like that. It has to be in decent enough condition. So when I go in, I can just make cosmetic updates and then get it rented out. Airbnb was very new back then. So I was like, okay, I'm going to try Airbnb. We're going to renovate the property. We're going to buy it. So bought the property, did a regular conventional loan, put 20% down, put it in my husband's name, used a part of my 401k for the down payment, got a credit card to pay for the renovation, just like very much like just green, and bought the property for $60,000, put maybe $20,000 into it, made maybe $35,000 that first year on Airbnb, which was amazing. And later sold that property for $450,000. And we only sold it because we hit the top of the market from where it was at the time, and we needed the cash. and a developer bought it because they were getting ready to, he bought like basically all the properties on that street because they're getting ready to tear it down and build townhomes. So it was like, let me, and even us selling it for that much was like, he was just trying, like he knew, like we knew we got the top of what we can get for that little bitty house. All that to say, alignment is really important. Okay. Appreciation is the key. That is the key to true wealth. Holla at your mama if you don't agree. But okay, I'm gonna get back. I'm gonna tell y'all the 3 cities. Okay. But I just had to give you that story and that example of, it's not that I did anything super different. It's not that I came from money or that I grew up, with parents who invested in real estate. None of that is true. Okay. I learned, I got around other people who were doing it. I asked questions. I made the sacrifices, going to the conferences, going to the networking events, and I learned and I started. I didn't research my way to death. I got in there. I took risks. I gained the experience and learned over time. Okay. So let's get into the 3 markets that I think that you should invest in real estate in 2026. Okay, let's jump into it. First one, Indianapolis, Indiana. Okay. If you've been priced out of the city you're in right now, I want you to lean in and listen to this. Okay. This one market on my list where a normal salary buys you a home. That is really difficult. Okay. In America right now, people are moving back in, jobs are showing up and the money is flowing. Okay. So specifically, Eli Lilly, the pharmaceutical giant headquartered right there. They're pouring $13 billion into new manufacturing. Okay. Another one, Elanco just built a new global headquarters in the downtown. They're pouring in $200 million of investment. Okay. Like I said, follow the money, guys. This is what I see in Atlanta. Follow the money. When you see cities and other corporations pouring into the city, that is an indication of something is coming. These companies they do so much research 30, 40, 50 years ahead of time. So if they're going to pour this kind of money into the city, they are doing it for a reason. Follow the money, y'all. Okay. So not only that, you have Cummings, Elevance Health, Salesforce, and Amazon are all creating jobs there. All right. And so here's what I also love about this. The median home price has climbed almost 104% and is still appreciating 5% every year. That is huge. In a market where we're constantly seeing headlines saying prices declining, the prices decline, this market specifically is appreciating 5.5% in appreciation every year. The average appreciation when we're not in this weird economy place that we're in now is generally 3%. So it's almost doubling than your normal appreciation, y'all. That's crazy. Population is increasing, job growth is increasing, and people can actually afford to live there. That's the key. Look at Indianapolis, Indiana. All right, let's jump into the next one. Columbus, Ohio. This one is quietly becoming a powerhouse. This one's another one. Oh, similar to Indianapolis. I don't know if I mentioned this. I like Indianapolis also because multifamily is there. If you're a person and you're like, you want to invest in multifamily because you want to do 2, 3, 4 units, you want to invest in multifamily and you want appreciation, that's a hack. That's a really good, something to consider with those markets like Indianapolis. Similar to Columbus, it has the same type of multifamily inventory too. If you're open to house hacking, which I'm going to do a whole nother episode on house hacking because that's the cheat code. You house hack, you move into one side, you only put down 3%, whatever it is. You rent out the other side and you stay there or you move out. I mean, like, that's amazing. Columbus has good multifamily inventory as well. Okay. So if you blink, you may have missed it because the chip money changed everything for Columbus. Okay. Not only does Columbus have, the EV chip game on lock, but also they are a big medical city as well. And we know that between green energy and healthcare, that's not going anywhere. Okay. So out of Ohio's entire population growth, Columbus pulled in 53% of that population growth. So people are moving there and they plan to add over another 100,000 jobs before 2030. Okay. It is rated one of the fastest growing cities in Ohio. The cost of living runs about 7% below the national average, which is good because, again, affordability is a thing. And homes are appreciating 6% a year, similar to Indianapolis. Again, double your normal appreciation. Okay. I think even right now, appreciation nationwide is not even, it's maybe flat, maybe 1 to 2%. So the fact that these markets are appreciating 5 and 6%, that is huge. It's strong, steady, good salaries. Columbus is a good market. I've helped people buy properties in Columbus. Really good market. All right. The last one that I'm going to mention, and I'll do some honorable mentions as well, but the last one I'm going to mention is in my home state, Texas. It is San Antonio, Texas. Mind you, we used to go to San Antonio every year for family vacation. That is the only place we went for family vacation is San Antonio. So to think that San Antonio is one of the top markets to invest in now is crazy. San Antonio, let me tell you more about San Antonio. And this is especially for everyone watching that may be from Austin and Dallas and they feeling like they're locked out. I own real estate in Dallas. I own real estate outside of San Antonio as well. It is expensive. Okay. So if you feel like you're priced out, then watch this. San Antonio is the back door into Texas. Median home prices run roughly 40 to 50% of what you pay in Austin and about 60% of Dallas. And people are really catching on. The city has been adding around 30,000 residents every year. Okay. And a lot of them are relocating from pricier markets in Texas. So they're local moves. Also, the economy is very diverse and recession resistant in San Antonio, which is cool. San Antonio is home to USAA. There's a big military base nearby in Killeen. They're also home to Toyota, Valero, and HEB plus JP Morgan. Okay. So that's huge. And because of the military base, like I mentioned, it creates a lot of stability. The government is pouring tons into military. So if you're by any military base right now, that may be something to consider to invest in because the government is pouring so much money into military. And so that can be a very stable economy for you right now. And also, let's talk about appreciation. The appreciation has been the kind that I like. It's steady, not a super roller coaster. Over the last 10 years, San Antonio homes have appreciated about 93%, averaging just under 7% per year, y'all. 7% appreciation per year. That's beautiful. And they're still climbing year over year. Okay. And so that's huge. So people are moving to San Antonio. Their jobs are holding strong. And it's also affordable. Okay. Just some other cities to mention that you also want to consider. Atlanta, Georgia. Atlanta is Atlanta and people love moving here, y'all. People say Atlanta is full. It's not. There's so much land, especially on the west side. Most of my properties on the west side, and there's still so much growth and development taking place. Atlanta is expected to double in population over the next 20 years. People are moving here. Jobs are moving here. Atlanta stays on the top 10 list for sure. Nashville is another one. People are moving to Nashville. It's a fun city. Also still affordable, especially in some of the metro areas, and housing, lots of housing options. Okay. So where do you live? Where are you thinking about investing in real estate in 2026? Drop it down in the comments and let me know. And if this episode was helpful for you, please share it with someone else. Don't forget to like and subscribe, and I'll see you next time. Bye.